Welcome to Digital Asset News. Take the top stories in cryptocurrency and digital assets and break them down into bite-sized pieces. Today, it is May 11th, and we are on the eve of the Bitcoin halving. But I want to talk about something that is the only story I believe that is out there, and that is the crash that occurred over the weekend. So we're going to get into that and a couple of things, but it's going to really get deep, and we're going to go into a lot of different problems that I see with this market and what could potentially turn it around. But first, let's take a look at what is going on right now in the market as we speak. So we had crossed that line of 10,000. I think we were at 10.3 at some point, but we've actually taken a huge dip, and it went down to I think 8,100, and it was massively, and we're going to talk about that. But right now we have rebounded a little bit to almost 9,000, and that is fresh as of May 11th. It is 9:40 a.m. Texas time, and looks like things are kind of getting back to where they should be, or hopefully could be. And there's some green days, or green parts and some red parts. It's just kind of spattered throughout the whole cryptocurrency and digital asset market. So, but really, in all honesty, nothing has changed. Absolutely nothing. And we're gonna talk about what has not changed, what has changed a little bit, but in regards to the functionality and to the basics, nothing has changed. So let's just jump right in. So this was an article by Crypto Post, and it kind of just laid it down like, hey, here's the reasons for the halving dump. And it talks about Bitcoin price drop from 10 grand to 8,100 with just over a day. And it says it dropped by 9% in a single hour. If you were in the traditional markets, you would have lost your mind. But for us, it's like, no big deal, because we have ice in our veins and we're used to this type of nonsense. So it liquidated $200 million worth of shorts, obliterating the futures market. Three key reasons could be strong multi-year resistance above 10,000, sure, I guess. Whales moving to short the market on BitMEX, yes. And extreme volatility heading to the halving, yeah, okay. So what I believe here, truly believe, it's all whales. It's all whales and it's massive manipulation, and that's the problem. And the reason is because there's just so few amount of liquidity. Not liquidity, the market cap for cryptocurrency is only, hovering around $230 billion. That's nothing compared to multi-trillion-dollar market caps for different asset classes. So if you're a whale and you had a lot of money, it's easy to manipulate this. And this is what's happening. And this is why I dollar cost average. I do it every week. I pay for the same thing every week for my Bitcoin and my Ethereum, and it just kind of comes out automatically. And it's not very sexy. It doesn't look really good, and you can't make a lot of money, overnight, like you hear about all these different commercials on YouTube and Twitter, and where you can make this money. But it doesn't matter, because dollar cost averaging just works. You can be an investor or you can be a trader. Some people are both, but I just believe in just doing investing, and I think that time in is better than time-ing. So if you're trading, God bless you. If you're trading, great, but you probably got wrecked hard. And if it didn't happen today, it's going to happen. So you can't control the whales. You can't. All the different TA that you're doing and everything else, that's great. But when whales get together and go, you know what, let's make a bunch of money, you can't see that. You just can't. And I know there's TA people out there going, yep, I can see everything. Sure. Well, good luck to you. I just don't think you can. And you can't control the whales unless you're a whale yourself and you're able to coordinate with your other whale friends to crush the little guy. That's just what I believe. Now, you don't have to dollar cost average like I do, but that is what I do, and I don't think I'll ever change. And I'll just tell you right now, it's a lot less stress, requires a lot less brain power, which is good for me because I've only got so many brain cells left. And it frees up your life to do more important things, whatever that is that you want to do in your life, instead of looking at charts and analysis and everything else, trying to make $100 here and there. I just don't get it. And here's the deal. This is the best time to start investing. I got in at the top in 2017. But if you are here right now, you might be on the ground floor. I don't know. No one really knows if things are going to drop down even more. I think it's going to drop down a little bit, but not for sure how much. But I got to tell you this. If I could start investing right here from all the money that I had in 2017, it would be fantastic. And I would love to invest right now where you are at. So let me know what your comments are. If you think that's totally ridiculous, or if you think that has some merit, let me know in the comments. Love to hear your thoughts. All right, moving on. And I'm not going to read all of this, but this last sentence kind of sums it up. As whales started to sell at 9,900, it led to a cascade of long contract liquidations, primarily on BitMEX and Binance Futures. In 1 hour, more than 200 million worth of longs were liquidated. So again, it's all whales. And if we want to get into it and really dive down, let's just take a look at this next article. So Z Crypto talks about Bitcoin critics lampoon latest price plunge, claim whales are responsible. I'm not going to read the whole stuff because it's boring. But where it goes to this, Nouriel Roubini calls Bitcoin a total scam. If you don't know who Nouriel Roubini, he sounds like a magician, but he's not. He's known as Dr. Doom. He's an American economist. He's on CNBC, and he's like a perma bear. But he had some good points here. He says, look, Bitcoin crashed by 15% in 7 minutes. I don't know if that's right, but all right, sure. But it crashed a lot on absolutely no news. And he's right, no news. It was a rigged, totally manipulated, whales-controlled market where most transactions, 90% of volumes, are false as exchanges pretend to have liquidity they don't have, massive pump and dump, spoofing, front-running, wash trading, total scam. So I believe in part of this, and that is that the whales. I mean, that I think that we're all in agreement there. I don't know how many people would say against that, but the point that that I'm trying to make here is that nothing has changed. There is no like earnings report that came out that said Bitcoin, blah, blah, blah. That doesn't exist. Nobody has hacked Bitcoin. There is no real fundamental changes that you would see in the traditional stock market, which cause things to change or cause things to crash. Nothing has changed. Now, manipulation, I believe, is totally rampant. And I believe we need regulation. I know some people, on my channel and most channels, you have a wide swath of people. On the one side, you have people who are like, anarchy rules, nobody should regulate, free society, don't step on me. On the other side, we have like, we need massive regulation, we need to clamp down, we need to be like communist state. But those are two sides that are just extreme. And I don't think that's where most of us are. I think most of us are right somewhere in the middle, meaning a little bit left, a little bit right, but we're not on those extremes. Some are, and whatever. God bless you. Great. But I think we need some regulation because this stuff is just out of control. I mean, it just is. And will we stop all the bad actors? No. I mean, will we stop manipulation? No. I mean, can we stop car accidents and massive manglings? No, but we do still use speed limits, and those seem to kind of help. I mean, we could just be on the Autobahn all the time, just go 140 miles per hour all day long, but I don't think that's what it really comes down to. I think we really need some regulation to kind of rein things in. Now, moving on about what he said here about the transactions and pump and dump. False volumes can be perpetrated by crypto exchanges, sending bitcoins to own hot wallets to pretend there's liquidity. They enable market bots to emulate buy and sell orders, and they presumably do all that to fake up the 90% of the activity reports. Now, do I think that all exchanges do this? No, I do not. I do not believe that they all do this. Do I think that some of them do this? Absolutely. And that's why I get asked for requests to advertise on my channel every day, about 10 times a day. And there are all these crazy, wacky exchanges. And I'm like, I don't know you. The only currency I have with you who are listening to this video is trust. You trust me to give you the best information. I'm not going to give some crazy exchange out there that are probably doing these types of things. I trust certain exchanges. And that's how I see it. So I'm not going to, go out there and start to go, yeah, do this exchange. That makes no sense because some of them do absolutely do this. Moving on, it states, thanks to jurisdiction matters, not every crypto exchange can pass an audit or invite users to their office. Every year, there's always news of a crypto exchange getting hacked, bankrupt, or suffer from inside jobs like data leaks, and absolutely that's true. Until the regulators come in, we'll never know for sure if this guy was actually right. So let me say it again. Regulation. I've said this a ton of times on the channel, and we just need it to get in here to kind of shore up all of our shortcomings. And taking a look at like hacks. This is from the Nano Ledger website, and they put it together perfectly. And it just goes through like all the different hacks that have happened on the exchanges. This wouldn't happen so much if we had some kind of like regulators in place going, hey, are you making sure that you're doing these things? Are you safeguarding people's data? Are you safeguarding yourself so this thing doesn't happen? Are you actually a scam? Like that one in, in Canada, the one that said that he died and took all the money and who knows what it is. Anyhow, 2011, we had Mt. Gox, 30,000, 50,000. And as I'm going through this, tell me if you recognize any of these, because most of them I don't. I mean, Mt. Gox I know about, but that doesn't exist anymore. Bitfloor, 250, 260, Vicurex Input, I don't know any of these. Mt. Gox in February 2014, 460 million. See, if they just would have had a little bit of safeguards, this wouldn't have happened. Poloniex got 50,000. And down the line, down the line, down the line, down the line. And it just keeps happening again and again and again. Are these exchanges actually real exchanges? I mean, they're real exchanges where they had some money, but I don't think there was any regulation going on, that's for sure. BitGrail, 195,000, CoinRail, and even coming in 2019, look at this, Cryptopia, 3 million. Coinbean, 100 million? Jeez Louise. Binance, man, 40, I don't know if that's 40 million or 40,000. I think it's 40 million. I don't know what happened there. Bitpoint, 32 million, and then on and on and gone. But again, like I've said, the price that happened over the weekend didn't drop because of some hack, some other different news that came out. It was all manipulation. So, in my opinion, nothing has changed, which leads me to my next point. Fundamentally, you have to take a look at some of these traditional market guys. And if you don't know, I've talked about this a couple of times, but there's a gentleman named Paul Tudor Jones. He is a legend on Wall Street. He's got the Tudor Group, which has 21 billion assets under management, and he just said on Friday that he is going to invest into Bitcoin. And this was from Joe McCann, and he tweeted out, "For everyone that bought Bitcoin for the first time this week, thanks to the Paul Tudor Jones nudes, you've now been officially baptized into crypto's world of volatility." And that's true. I mean, it's true. Like, if you come to the traditional market, you're like, oh, Bitcoin, that sounds pretty good. And then you just drop 20%, you're like, what the heck just happened? So that's not good for these types of people who have just came in. Sorry, but that's how it's going to be. Anyhow, we talked about this in the last two videos. We talked about this bearish outlook past the third halving, and this was from the Masari group. And we also talked about it a couple days ago, where we took a look at 2016 predictions for the halving right before that halving, and how it kind of may even out to the 2020 halving. We took a look at Trace Mayer, who was like a Bitcoin OG. But to delve into this, this was put up by the Masari group, and they got the information from Paul Tudor Jones. Paul Tudor Jones, the billionaire, put it out. He put it out in his financial letter to all his investors. And he said, look, this is how I see it. I believe Bitcoin's going to be, it's a good speculative asset, and it could be a good store of value. And he compared it to the top four, or the top three stores of value. And he said financial assets is the best, 71. Gold came in second, 62. Fiat cash, 54. And then Bitcoin, still, it came in low, but it still came in. He said 43. And he pretty much said, look, he goes, if you take a look at cash, gold, and financial assets, their market cap is so much bigger than Bitcoin. It's 1/1200th of Bitcoin. So the problem here is that Bitcoin is actually underappreciated. And we took a look at, why he would say that, but he just came on the news and just said, this is why I said it. So let's take a listen to what he's talking about.
For a long time, you were a skeptic of Bitcoin and some cryptocurrencies, but you recently appear to have changed your mind about that. What happened?
Well, COVID happened, and the great monetary inflation happened, and that made me begin to think about how do you want to be positioned in your portfolio going forward. So that's really what tripped my interest in Bitcoin. And you have to realize, if you just think about, say, Bitcoin versus cash, right? Bitcoin, when I think of stores of value, I think of it four ways: purchasing power, trustworthiness, liquidity, and portability. That's kind of the categories I put it in. So when it comes to trustworthiness, Bitcoin's 11 years old. There's very little trust in it. We're watching the birthing of a store of value, and whether that succeeds or not, only time will tell. What I do know is that every day that goes by and Bitcoin survives, the trust in it will go up. If you take cash, on the other hand, and you think about it from a purchasing power standpoint, if you own cash in the world today, you know your central bank has an avowed goal of depreciating its value 2% per year. So you have, in essence, a wasting asset in your hands. So Bitcoin, I think it's a great speculation. I've got something between 1 and, I think, just over 1% of my assets in Bitcoin. Maybe it's almost 2. That seems like the right number right now. it's not, for me, it's not the greatest, it's not the, the great cure for all the monetary ills, etc. It's a
So yeah, it makes sense. So he's like, yes, okay, so these 4 criteria: purchasing power, trust, liquidity, and portability. And he, pretty much lays it out. As Bitcoin continues to sludge through and make it through all these different problems and issues, it still survives. And we've seen it even survive during this downturn of COVID-19 and coronavirus. So if you are looking at something as far as trustworthy, you don't have to look too far. However, he's right. It is early, and that's why gold people who are like, hey, look, it's been around thousands of years. Bitcoin's going to make it too as time moves on, and he's going to tell you why it's going to move on or why it's going to actually last. But one more thing he said there, which was fantastic. He talked about money. He goes, look, if you have it in cash and it's sitting in your savings account, it just depreciates 2% because that's what the central bank is trying to do. They want to depreciate that value because debt is what they're all about. And it's a fantastic statement. And people don't understand that inflation is your second tax. So you have to do something with that money or else you just lose money. You're just losing money in your savings account. Anyhow, now we're going to talk about, why this is going to make it. And it just made total sense. And it's just a minute or so. So let's take a listen.
And yes, the digitization of the world clearly benefits Bitcoin. I mean, we wouldn't even be talking about Bitcoin if we weren't seeing first cousins like Venmo and a variety of other ways. My children don't even carry cash. They barely even know what cash is. So we're clearly digitizing the global economies. You've seen some countries do it explicitly, like India. You're seeing other countries on the way to do it, like China. So we're getting in an increasingly digitized world, and Bitcoin will be that much more accessible by that universe of people that could own it as a store of value. When you think about every bull market, every single bull market has one common thread, an ever-expanding universe of people who own it. So there's probably, the estimates are between 55 and 70 million people own Bitcoin. We really, if you're buying Bitcoin, your bet is that number's going to go to 120 million or to 200 million. And it's kind of hard when you look around and you see that the world's becoming increasingly digitized, not to think that the preponderance evidence at this point in time doesn't point in that direction. But again, when I think of Bitcoin, I look at it as one tiny part of a portfolio. It may end up being the best performer of all of them. I kind of think it might be, but I'm very conservative. I'm going to keep a tiny percent of my assets in it, and that's it. It has not stood the test of time, for instance, the way that gold has, which has been a store of value for 20.
Exactly. Okay, so I get it. So it makes sense that he's saying it's a store of value. It'll probably, or it might be the best performing asset. Don't know. We're gonna just test it out. And if you think about this guy is a traditional market player, right? Hedge fund manager. So if he's thinking the same way, then other people in his group, in his circle that he hangs around with, and all the people that kind of look to him as a legend are going to go, well, if PTJ does it, then I think I can do that. And I think, why not talk to our clients and say, hey, how about putting 2%, 3%, 5% of your portfolio into Bitcoin and digital assets? Why not? Because we can offshoot or offset some of these different disruptions that are happening in the traditional market. And if you just look at that and say, well, if you've got somebody like Fidelity Digital Assets with 2.4 trillion assets under management, if you've got Ameritrade with 1 trillion, then you got some place like Van Eck, who is a big gold bug, and they even put out where they said that, hey, Bitcoin is far superior to gold. And then we have, Grayscale, which they have 2.2 billion assets under management, and they had the majority of investment for the first quarter. 88% came from institutional investors dominated by hedge funds. And then the last year, 79% came from institutional investors dominated by hedge funds. And now we can add on to the Tudor group where they have 21 billion. If you don't think that these financial planners are going to start to tell their clients, hey, Ted, or hey, Jane, I know it's been a rough year because of the coronavirus and the different problems of the economy, but what we have is a new asset class, and it can offset some of these volatility, which is weird to think about, in the traditional markets, and we can put your money into this. And over the last 5 years, it has dominated everything. It's beat the S&P 500, it's beat oil, it's even beat gold. So maybe we should look into that. Sure, that sounds good. So here's my question. First of all, do you agree? Do you think that the world is becoming more digitized, or are we retracing into any kind of old world practices? So let me know in the comment sections below what you believe is actually happening, and do you think that these financial analysts and hedge fund managers and financial planners are going to start to recommend this to their clients? And how do you see that working all out? Let me know in the comment section. Let's move on to our last piece, because this is one of the most concerning things that I had seen. And it talks about 11 years in, why are Bitcoin exchange outages still occurring? And is there an answer? And this made me think, and I'm going to ask for your help. You who are watching this video, I need you to help me out. So this just states the exchange briefly limited. This is talking about Coinbase. The exchange briefly limited users access to their crypto holdings as the Bitcoin price fell from $9,500 to near $8,000. So imagine you're seeing things happen free fall. You're like, wow, maybe I should get out. And if you're a trader, whatever. And you're like, I need to do something with this. Just not to have that option, it's kind of crushing. So Coinbase went down. Coinbase, a major U.S. cryptocurrency exchange, went out of service for the second time in less than a month. The outage occurred as the price of Bitcoin fell from $9,500 to $8,100, which is that's kind of a big deal. Late in April, Coinbase started denying service to users just as the Bitcoin price climbed more than 15% to close above 9,000. As market correspondent Zach Volo pointed, both the outages occurred even when trading volume was considerably lower than in the past 2 to 3 years. So here's the question. Have you seen this happen with your own Coinbase account, or is this just tinfoil hat conspiracy and it really hasn't happened too much? So me, like I'm going to tell you right now, I've seen it. And it's why I'm asking for your help. Now, I don't trade. I don't take things out as they're slipping. I just let them go. Like I said, dollar cost average, very boring, whatever. But the problem that I see in the future is this. I have a video. It's called the Bull Run Basics, and it's in my only playlist that I have. I make things super as easy as I possibly can. It's the very first video, and I talk about exit strategies. And when one of the exit strategies I have is I'm using Coinbase exclusively to offload things. Now, what I see as a problem is when I'm trying to offload and the price is going up and I don't hit my numbers and they just start to shut things down. And then I'm like, what the heck? Now I can't implement my strategy. So I realize now as I'm looking at this thing that it's incomplete. I made a mistake. There's a hole in my exit strategy that I need to shore up right now, because as time goes on, this is the next super cycle as I think it's going to happen. Different halvings, 2012, 2016, now 2020. In the next year or two, we're going to see massive gains. That's just what I think. So what's going to happen? I need to figure out which exchanges can we cash out in fiat, because I know we have Coinbase. You also have Binance. You have Binance US, but I'm in Texas, so I can't use that. The other two type of exchanges, I believe that Crypto.com, you can buy and sell out in fiat if you need to. And I'm also looking at Kraken as well. And then there's another app that we just covered this. It's called Abra. You can't cash out in Abra, but it does give you the ability to very low rates to buy cryptocurrencies and things like that. So maybe you can transfer it to another wallet. Again, I'm not getting paid from any of these people. This is just something that I see, and I need to shore up a problem that I have. And that's why I'm asking for you. So let me know in the comment section which different exchanges have the ability to cash out in fiat and to US dollar, because those are the ones that I see right now. Because if you can't, if you have an exit strategy like we talk about in this video in the playlist, and you have it already set, like when Bitcoin hits 30,000, you're going to sell 5% of it or whatever it is. If it doesn't execute and the whole system crashes, what's the point? So that's why I'm asking for your help. All right. Before we go to the scam of the day, because I've been slacking on that, I really want to apologize. I want to give a thanks to all the supporters out there. Now, underneath there's a join button. It just allows you to, give a couple dollars if you want to. That's fine. But I don't hold anything back, so it's just like a tip. But there's level 1s and level 2s. Again, all right soft and myself holds. Thank you very much. And that's it for today's video. If you got time to stick around with me, it's just going to take a couple minutes. We're going to go over scam of the day because we need to shore up some of these different problems that I've seen. All right. So thanks for sticking with me. Why did I start scam of the day? It's because I was sick and tired of people getting screwed out of their money. And we did it in January, and we've been doing pretty well. The problem is we've kind of hit a snag. I need your help to report these different, what I see as scams. So in the comments, or no, sorry, in the description of every one of my videos, there's going to be a section that's going to be called Scam of the Day. And when you click on that, it's going to take you to one of these scams. Now, how do we know this is a scam? Well, first we look at the comments section, and that's kind of like our red flag. So if you see a lot of scams, maybe it's a scam. Like When Mullet apparently is just a huge hater. Maybe he's just a hater. Maybe he doesn't like Binance airdrops channel. And, he's just a hater. What we're looking for then is asymmetrical giveaway. So if you see stuff like this, if you send us 1 Bitcoin, you'll be airdropped 5. If you send us 5, we'll give you 25. That doesn't happen. No one likes you that much to give you way more Bitcoin. You're not special. So, maybe you are special. I don't know. So the thing is here is if you think this is a scam, this is a red flag. You can always go to the official website, to Binance or to Ripple or to Kraken or wherever and say, hey, are you guys giving away free Bitcoin? Just send them an email. They'll get back to you in 24 hours. They'll tell you no. And then you are 100% sure that this is a scam. Or you can just look at it and go, I think this is a scam. So we're going to downvote. I dislike this. Click these 3 dots right here. Click on report and say this is spam or misleading. And then we're going to choose this thing that says scam and fraud. Then we're just going to say next. You can tell I've done this a couple times. Binance does not do giveaways like this with this much Bitcoin. This is a scam. Please remove. And you can use whatever, however you want to describe it yourself. Just don't go overboard. And that's it. That's all, I could ask for. So if you could take a couple minutes, that'd be fantastic. I'd really appreciate it. And it helps out new people who are coming in. And believe me, I think there's a lot of people coming in during the next year to 2. So that'll help them not get screwed out of their money. All right. So thanks for watching. Really appreciate it. I like those videos. Material's going to pop up your left and right. And I will see you on the next one.